Thank you all for joining us today. My name is Tada from the Corporate Planning Division of ITFOR, and I will be the moderator today. Now that the time has arrived, we will begin ITFOR financial results briefing for the fiscal year ended March 31st, 2026. This time we are streaming live from the company's briefing room. We hope this video will be helpful in deepening your understanding. Let me begin by introducing today's speakers. Koji Sakata, President and Representative Director.
I am Sakata. Thank you for joining us today.
Hirotaka Oeda, Managing Director and Executive Officer, General Manager of the Corporate Strategy Department.
I am Oeda. I am in charge of sales. Thank you very much.
Katsuo Nakayama, Director and Executive Officer, General Manager of the Administration Department.
My name is Nakayama, and I am in charge of the Administration Department. Thank you.
Kazunori Kono, Director and Executive Officer, General Manager of the Payment Business Division.
My name is Kazunori Kono. Thank you very much.
Thank you. Sakata, President and Representative Director, will now present the financial results and business overview for the fiscal year ended March 31, 2026.
Yes, I would now like to begin the presentation of financial results for the fiscal year ended March 31st, 2026. First of all, I would like to briefly explain the executive summary, including environmental aspects, business performance, new orders, and capital allocation. In terms of the environment, there is an ongoing demand for operational efficiency amid labor shortages and a declining working population. As reported in the news, AI evolution is redefining existing SaaS business models. Next, regarding our performance, we posted higher net sales and lower net income year on year. However, operating income increased. In addition to our flagship financial institution systems, new orders and sales for public sector projects related to government systems standardization projects, resulting in an increase. We achieved the new business sales target of 1 billion yen through the M&A of iCell, which was originally our equity method affiliate. Next, regarding new orders. New orders showed strong year-on-year growth, coming in at approximately 120%. As I mentioned earlier, one reason for this is the steady increase in projects for financial institutions, in addition to projects related to the standardization of government systems. Lastly, regarding capital allocation, we have invested in 3 companies. Zentech is an AI startup, Metcom is a telecommunications company, and Wame Zing provides inbound tourism solutions. Last year, on November 13, 2025, we announced an increase in annual dividend from 50 yen to 80 yen. The other is that we announced our progressive dividend policy on February 12th this year. I will explain the agenda in 3 categories. Review of FY2025 performance, progress on fly on 2026, our 4th medium-term management plan, and FY2026 Forecast. First, here's our financial results for FY2025. First of all, net sales were approximately 23.1 billion yen, 112.4% of the previous year's level, but slightly short of the forecast, resulting in 98.7% of the plan. Operating income was 3,858 million yen, 109.2% of the previous year's level, and 94.1% of the plan. To add a little to the sales figures, as I mentioned earlier, sales increased from the previous year, driven by the standardization of government systems and the acquisition of iCell as a subsidiary through M&A. However, sales in retail e-commerce and payment systems were partially stagnant. We expected to recover this shortfall through projects related to the standardization of government systems. However, implementations of major vendors' core systems have been delayed to FY2026 at approximately 7 regional governments. As our products operate as subsystems, our schedules were inevitably postponed to FY2026 along with the core systems. Consequently, the reality is that we could not offset the shortfall. As for operating income, we underperformed the forecast. This was due to a slightly lower gross margin and a shortfall in net sales. In addition, we relocated and renovated our Kyushu and West Japan offices. Next, Regarding our performance trends, both net sales and operating income achieved record highs over our 50-plus year history. This breakdown of operating income changes shows that operating income was 3,532 million yen for FY 2024 and 3,858 million yen for FY 2025. While gross profit increased by 922 million yen, we allocated approximately 110 million yen to human capital investment. This includes higher personnel expenses, such as base wage increases and employee benefits expenses. Next is R&D. This is an investment in system development for our future, specifically for system enhancements and new product developments. Regarding internal investments, we invested in creating a comfortable work environment through the relocation and renovation of the Kyushu and West Japan offices. On a smaller scale, we also renovated the Tokorozawa building. Furthermore, while the 12th floor of our headquarters here has already been renovated, we plan to carry out renovations on the 9th and 10th floors, as well as an expansion of the 7th floor in FY 2026. Lastly, license and other fees accounted for about 100 million yen. As a result of these investments, operating income ended up at 3,058 million yen. Regarding segment results, in system development and sales, net sales were 118.6% year-on-year, and segment income was 115.0%. In recurring, net sales came in at 104.4%, with segment income at 103.9% year-on-year. In recurring, in addition to steady growth in maintenance services, BPO achieved net sales in line with the previous fiscal year. Please understand that in FY 2025, we reviewed and reorganized our BPO operations, which included the decision to forgo certain low-margin orders. Regarding the trends in new orders and order backlog, while we experienced some stagnation in FY 2024, we achieved a steady recovery in FY 2025. In system development and sales, new orders were 137.3% year-on-year, and the order backlog was 123.2%. In recurring, new orders fell slightly short at 99.8%, with the order backlog coming in at 98.3%. As background, we reviewed our BPO operations for regional governments to utilize our human resources more effectively in profitable areas. This led to our decision to forgo certain orders from a profitability perspective, which resulted in a slight year-on-year decrease. Moving on to our sales results by sectors. ITFOR operates in 6 main sectors: financial systems, public systems, retail e-commerce systems, CTI systems, communication systems, and payment systems. I would like to explain each of them individually. In financial systems, sales performed steadily, coming in at 107.4% year-on-year. This steady performance was seen across both regional banks and non-banks. We have also moved forward with the development of new package systems in FY 2025, and we expect solid growth in FY 2026. In public systems, projects related to the standardization of government systems have performed steadily. Since many regional governments have yet to complete their standardization in FY 2026, we expect this demand to continue driving our orders and sales in FY 2026 and even into FY 2027. In retail e-commerce systems, sales declined significantly year-on-year. This was due to the absence of large-scale projects and our focus on developing newly developed products. Now that preparations are complete, we expect sales growth in FY 2026. As for CTI systems, sales reached 128.6% year-on-year, driven by the steady contribution of NICE's CX1 product. In communication systems, sales decreased slightly year-on-year. Although we experienced sluggish deliveries in security-related projects, we received large orders from a power company. We believe that securing an order from one power company often encourages others to follow suit, meaning we were able to build significant potential in FY 2025. In payment systems, sales declined year-on-year. This was due to delays in closing new projects and the delayed release of new products by a terminal manufacturer. However, as this delayed demand is translating into orders, we are expecting sales growth for FY2026 while recovering the delay. Regarding other segment, a major factor was the consolidation of iCell as a subsidiary. Next, moving on to recurring. BPO came in at 101.5% year-on-year, and maintenance and usage fees reached 106.8%. Regarding BPO, we decided to forgo orders from several regional governments from a profitability perspective. However, we are working to improve the efficiency of our order-taking activities through a dominant strategy while expanding our resources. Therefore, we expect to achieve both scale and improve profitability going forward. In terms of ROE and ROEC, ROE was 13.88% and ROIC was 13.28%. This is partly due to net sales and profit fell short of our plan. FY 2026 is the final year of our fourth medium-term management plan. Now, I would like to move on to the progress of this plan. First, let us look back and review our current medium-term management plan. In the first year, FY 2024, we focused on laying the foundation for growth. We deepened relationships with existing customers and made progress in cultivating new business opportunities, such as the development of new products like Coco Voice and Agent Hub. These developments brought us to the starting line for our new stage of growth. Next is FY 2025, positioned as our phase of running up to accelerated growth. In addition to the organic growth of our existing businesses, our business scale expanded through M&A. We believe this was the year our preparations were completed, making steady progress in the diversification of our growth drivers. As I will explain later, these are described as the digital platform and cashless platform. Finally, we consider FY 2026 as a turning point, shifting to discontinuous growth. With multiple growth engines contributing simultaneously, we aim to achieve discontinuous growth of our sales scale. Please look at the graph on the right, which shows our net sales progression of 20.5 billion yen, 23.1 billion yen, and 28.0 billion yen. The light blue section represents 2.8 billion yen, accounting for about 10% of the total. We aim to generate this portion through new businesses, such as CVC and M&A. Next, I would like to explain the diversification of our three growth drivers. The first is deepening and expanding existing businesses. The second is building a platform for foreign nationals. And the third is our growth capital initiative, under which we are establishing a structure to execute proactive M&A. We believe these three will serve as our growth drivers. I would like to explain one by one. We have a solid customer base deeply rooted in the 47 prefectures. The cross-selling rate within the region, where products from multiple business divisions are implemented, is over 90%. On the far right, we mention user conferences. Since we are a packaged system vendor, multiple customers use the same packaged system. We bring these customers together to hold various discussions and share their insights, allowing us to continuously grow and improve our packaged systems. As shown in the middle of the page, over 70% of regional banks use our systems. Supported by this solid customer base, we intend to further expand our business. Starting clockwise, from deeply understand our customers' operations, our strength lies in the fact that our sales representatives and system engineers uncover customer needs and understand their operations, enabling them to converse with customers on an equal footing. We then incorporate these customer requests to grow and expand our package systems. After implementation, we share the measurable benefits with each other. By having customers share these experiences and exchange information at our user conferences, we further improve our packaged systems, which in turn helps our customers' businesses grow. We have built such a positive spiral. Next, let's move on to deepening customer relationships in the financial sector. I mentioned earlier that we have achieved a cross-selling rate of over 90% across the prefectures. Right now, you probably associate ITFOR with our strong position in regional banks. That said, we must accept the reality of the ongoing consolidation and the decreasing number of regional banks, which we see more and more in the news. Despite this, if you look at the graph below, even though the number of regional banks has slowly declined from 99 to 96, the number of our system users is on a steady upward trend. On the right, we have detailed various packaged systems we implement. For instance, Mix 2.0 and Welcome are our personal credit information inquiry system and our web-based loan application and contract system. Scope in the middle is our personal loan operation support system designed to assist with customer screening. We also implement CMS, our personal loan collection management system, as well as the guarantee management system and claims recovery management system for guarantee companies, including bank subsidiaries. Our strength lies in our ability to provide multiple systems to a single bank. ITFOR alone can provide a one-stop solution for lending operations. Furthermore, we are rolling out supplementary products such as News, our payment commitment receipt service. Next, regarding enhancing our sales force. In FY2025, we achieved an in-region cross-selling rate of 91.5% for 2 or more business divisions and 72.3% for 3 or more divisions. For FY2026, we have set our targets at 95.0% for 2 or more divisions and 75.0% for 3 or more. By having our customers utilize multiple package systems, we intend to achieve further growth. On the map of Japan on the right side of the page, the number of business divisions deployed per prefecture, up to a maximum of 6, is indicated using shades of green. I would also like to mention that in FY2025, we received an order from a customer in Kochi Prefecture, which had been the only remaining blank prefecture. As a result, there are no longer any white prefectures on the map. We are often asked if ITFOR's strength lies only in regional banks. However, when we look at the breakdown of the figures, as shown in the graph, it is a fact that our net sales from other financial institutions, such as non-banks, are larger than those from regional banks. I hope this helps you understand that we are achieving growth in areas beyond regional banks. Regarding our FY2025 results in the financial sector, our current status stands at 560 systems and 270 users. For our FY2026 target, we aim for 17 new system implementations and 6 new users. Looking ahead to our FY2030 target, we are planning to expand our customer base to reach 650 systems and 290 users. We intend to make steady progress on this plan. Next, regarding public systems. We still have some blank prefectures in this sector, with our systems currently implemented in 32 out of the 47 prefectures. There are still regions where we have not yet been introduced. However, among regional governments, once an initial implementation track record is established within a prefecture, it tends to spread easily to other regional governments. This is known as a dominant strategy in retail store chains. We have a similar strategy, to build an initial track record first, and then steadily increase our implementations from there. Taking Osaka Prefecture as an example, currently our systems are used by 6 regional governments and 12 financial institutions within the prefecture. As a result, we have seen an increase in contracts, securing additional contracts within about 3 years of the initial order. We intend to continue pursuing this strategy. Moving on to our expansion in the public sector. Up until now, we have concentrated our sales efforts mainly on the tax division and the National Health Insurance Division. Going forward, we plan to broaden this scope. Since we are seeing growing demand for systems in departments like late-stage elderly healthcare and long-term care, we are actively expanding into those areas. Another strategy involves the solutions provided by our portfolio companies, Peik, Wamei and Vakan. When we visit regional governments, we frequently hear the concern that despite the large number of inbound tourists, their spending does not flow into regional economies. To address this issue, we are advancing concrete discussions to propose joint initiatives alongside our portfolio companies. By commercializing these efforts, we intend to make further contributions to regional governments. Gigabank, which I will explain in more detail later, is a startup providing an application for foreign workers. By including such initiatives, we intend to expand our business in the public sector. Next, regarding our payment business. As shown on the left side of the slide, we have expanded our business thus far by selling physical payment terminals. We will, of course, continue this business. That said, as you have likely experienced at restaurants, it is becoming common to order via table ordering terminals or through an app on your own mobile phone. We will also develop our payment business on such app-based payment in parallel. We have now laid the foundation to actively sell not only physical terminals, but also software-based payment terminals starting in FY2026. I mentioned earlier that our retail e-commerce systems saw sales drop by half year on year. However, we have finished developing several new applications during FY2025. For one, when you visit a department store or specialty store, you often see conventional POS systems with payment terminals attached by cables. We have developed a new mobile POS system to change this. By using a smartphone or the payment terminals I mentioned earlier, staff can move around freely without cables and process payments right on the spot. We have now laid the foundation to roll out this portable POS adaptable to any location. The other is our e-commerce sites. Previously, the business model for our e-commerce system, ITFOR, involved contract development and selling on premises, or having customers use our cloud system. Going forward, we have partnered with Shopify, a global standard SaaS e-commerce platform vendor, to expand into department stores. Our first user is scheduled to go live this month. This offers more than just standard e-commerce shopping functions. With this application, customers will be able to apply for department store gifts, either online or right on the spot at the store. The development has been completed, and this system is also scheduled to go live this month. Next, regarding communication systems. As I explained at the beginning, we struggled a bit with security-related projects. However, regarding the IP conversion for power companies, we received an order from a major regional power company. Based on this implementation track record, we now have clear prospects for expanding horizontally to power companies in other regions. Currently, we offer Megaplex, which handles IP conversion for the remaining analog devices. However, going forward, we expect the number of these analog devices to decrease and the proportion of PON, passive optical network, shown below to increase. We are proactively addressing this shift ahead of time. This means that, in anticipation of the declining demand for Megaplex, we have already begun pioneering our efforts in the PON business. However, these analog devices will not disappear immediately. We expect them to remain in use until around FY2035, so we believe the demand will continue for some time. Nevertheless, I hope you understand that we are taking early steps by engaging in businesses such as PON. Next, I would like to introduce our proprietary products, DigiShare and Coco Voice. DigiShare, our digital legacy management app, is a product that digitalizes end-of-life documents, such as wills, and passes the data keys to family members in the event of an emergency. We are promoting this product with a target of securing 6 orders in FY2026, and we will roll it out in collaboration with banks. Regarding Coco Voice, our AI platform to foster dialogue, we finally achieved implementation track records in FY2025. It is currently utilized by 4 companies, with POCs underway at 5 companies. We are seeing growing potential for the expansion of this product as well. Next is Pay Collect, our automated payment notification service. In collection operations, this smartphone app automates the entire process, from payment reminders to payment for customers of credit card companies. Its development has already been completed, and we have secured pre-contract orders from 2 companies. On the right side of the slide is Agent Hub, our digital debt consolidation platform. Currently, when credit card companies request investigations from law firms or judicial scriveners, They communicate using individual formats, such as faxes or paper documents. To resolve this, we have built a system that serves as a coordination hub using our standard format, connecting credit card companies with multiple law firms and judicial scriveners. Its implementations were decided in FY2025, and we have successfully established the potential for further expansion. We have been investing in AI-related initiatives up to now. However, positioning FY2026 as the year of embarking on a new era of AI implementation, we believe we have completed the study and POC phases and are ready to move into actual implementation. We are set to collaborate with our existing customers on how to best operate and utilize the data accumulated in our highly competitive credit management and screening systems. Once we establish a proven track record there, we believe we can expand this horizontally. While there are many AI engineers at startup companies, our approach is not to compete with them. We aim to differentiate ourselves by delivering concrete results, utilizing the data and accumulated understanding of customers' operations gained through the implementation of our package systems for numerous customers. Next, regarding our business strategy, this slide shows the status of our M&A and CVC investments. We have steered our course from in-house development toward co-creation, although, of course, we still have packaged systems that we will continue to develop internally. Since FY2024, we have invested in Vakon, Paik, and Zentech. With Zentech, we are working together on AI development. Furthermore, regarding iCell, we completed its acquisition through M&A, turning our equity method affiliate into a consolidated subsidiary. Moving down the slide, we have continued our investments in Metcom, Huamei, and Gigabank. We will continue these activities in FY2026 as well. In particular, Vakon, Paik, Metcom, Huamei, and Gigabank provide applications for inbound tourists and foreign workers in Japan. We believe that by connecting these initiatives, we can contribute to solving various challenges. Earlier, I mentioned about inbound tourists and foreign workers in Japan. According to government announcements, the number of inbound tourists was 86.87 million in 2024, and the government's target for 2030 is 60 million. Recently, there has been news about a decrease in tourists from China. However, we hear from our customers at regional governments and regional banks that tourists from South Korea, Taiwan, and Western countries are increasing considerably. While the decline in Chinese tourists may be a setback to some extent, we believe the overall trend will continue to grow. The number of foreign workers in Japan is also growing, driven in part by labor shortages. We expect that needs here will keep increasing. Based on the premise that this target demographic is expanding, we want to develop this market. One is Huamei, noted here under the Platform for Foreign Nationals. Originally, the company's strength lies in packages for inbound tourists, such as skiing. However, they have an application for tax-free e-commerce in preparation for the tax exemption reform this November. We intend to demonstrate our strengths by developing business together using these applications. Next is Gigabank. It seems that opening bank accounts and obtaining credit cards in Japan currently require significant effort for foreign workers. We intend to cultivate this area by collaborating with Gigabank and selling to our customer base of regional banks. Furthermore, we would like to help create an environment where foreign nationals can quickly start working in Japan. In this way, we intend to advance our initiatives, including AI, through collaboration between ITFOR and startups such as Paik, Vakon, Metcom, Huamei, and Gigabank. Another point is the Growth Capital Initiative, under which we will continue making various investments. In our FY2033 vision, High Five 2033, we have set a sales target of 70 billion yen for FY2033. Of this amount, we are targeting 28 billion yen from new businesses, and we intend to make solid preparations to achieve this. We are planning to establish a dedicated team or a new company for investment and new business development. By systematizing M&A and investments, we aim to realize repeatable and discontinuous inorganic growth. To achieve stable deal generation, we intend to increase the number of evaluated deals. Furthermore, when making investments, we intend to create synergies with our company to ensure higher investment success rates and ultimately drive knowledge capitalization within us. Next, as noted here, are ensured repeatability, execution of PMI, and post-investment business development. Since some startup companies have limited financial resources, we will establish a team to support them through system and development investments, thereby creating a foundation for mutual growth. We expect to share more details around June or July. Regarding our human resource strategy, let me address a question we occasionally receive from individual shareholders. They often ask us, "Do you have enough engineers for the increase in sales?" By April 1st, 2026, we have successfully hired 64 engineers, bringing the total to 73 when including sales staff. We plan our hiring with future growth in mind, so we consider this sales target to be entirely achievable. Because we work in teams, project management is also essential. For the global PMP certification, we have successfully reached our goal of a 20% certification rate. We plan to continuously encourage our employees to study and increase the number of certification holders, which will allow us to drive our projects forward with strength and speed. Furthermore, regarding AI talent development, we are hoping to cultivate specialized AI talent moving forward, or to steer our organization toward a situation where possessing basic AI skills is simply a matter of course for everyone. That is what we have in mind. Regarding the development of multi-skilled personnel, for example, previously, specialized sales staff for financial systems and retail systems operated separately within the same region. However, over the past 2 years, we have built a structure in the Kyushu region where a single sales representative proposes products from multiple divisions, focusing on public, CTI, and financial systems. Over these 2 years, each sales representative has grown and become capable of selling across various businesses, such as proposing financial systems while handling public systems, or CTI systems while handling financial systems. Through this, we have built a structure capable of responding to a wide range of customer requests by reducing opportunity loss, deepening customer relationships, and accelerating response times. Building on this foundation, while currently limited to the Kyushu region, we plan to expand into the Osaka region in FY2026 or early FY2027. In the development department as well, our engineers were previously specialized in specific domains, just like the sales team. However, to develop multi-skilled engineers capable of handling multiple products, we encourage them to take on various challenges in FY2025, and results have begun to emerge. Therefore, we believe we have built a foundation that enables enhancing flexibility in project formation, sharing expertise, and accelerating response times through a framework where each engineer can provide extensive mutual support. In addition to the AI talent development and AI utilization mentioned earlier, regarding reskilling support, we have expanded skill certification incentives similar to our PMP initiative. Below that is the Childcare Support Allowance, under which we introduced a system providing allowances to employees who take over duties from those on childcare or maternity leave, so they can take their leave comfortably. Furthermore, we introduced our side job policy on October 1st last year. Regarding ES Upward, we are implementing various initiatives. We try to listen to our employees by utilizing the Coco voice dialogue app I mentioned earlier. As shown on the bottom right, our new graduate 3-year retention rate is 93%. While there are often newspaper articles stating that many companies see about 30% of their employees leave within 3 years, we maintain a high retention rate. Of course, 100% is the best, but at 93%, we have consistently maintained a rate of over 90% going back about 4 years. Among our various initiatives, here's another one. We are currently conducting trials to see if this can become a business. We have established an office vegetable garden on this 12th floor terrace, and we are conducting experiments leveraging AI and IT to automatically measure soil temperature and water the plants. We are considering whether we can turn this into a business to support agriculture. We intend to launch this as a new business in FY2026. Regarding our corporate value enhancement strategy, we are sponsoring the National Programming Contest for elementary school students. Another point, shown on the right, is that we provide BPO services for regional governments across 20 prefectures. Through this, we have created approximately 1,000 jobs, contributing to regional job creation. In terms of IR activities, in FY2025, we held 2 financial results briefings, released the integrated report, and conducted 50 investor meetings. We also held 5 meetings for individual investors. These exactly match our target figures, meaning we have delivered solid results. In FY2026, we plan to increase investor meetings to 60. We will also increase meetings for individual investors from 5 to 7. Furthermore, we intend to go on an overseas roadshow to meet with several investors, thereby increasing the number of our shareholders. The graph on the right shows the number of shareholders from March 2022 to March 2027. Over the course of about 5 years, the number of shareholders, which was originally 9,450 in March 2022, reached 17,514 the month before last, in March 2026, representing an increase of approximately 1.8 times. We intend to increase the number of our shareholders through various activities so that we can bring this figure to 20,000 in 1 year by March 2027. Regarding capital allocation, we will effectively utilize our cash. Across shareholder returns, internal investment, human capital investment, existing business investments, and new business investments, we have achieved an overall progress of 70.1%. We believe we can exceed 100% of our target in this current fiscal year, which is the final year of the plan. In particular, progress for new business investments is currently at 87.4%. However, if an opportunity is truly effective, we are prepared to make bold investments. We intend to actively pursue investments in companies with which we can co-create and generate business synergies. Moving on to shareholder returns, we announced a revision to our annual dividend forecast from 60 yen to 80 yen on November 13, 2025. Furthermore, on February 12th, we announced the adoption of a progressive dividend policy. As a result of these measures, both our total return ratio and dividend payout ratio have reached 76.7%. Regarding our financial forecast, we have not changed the targets set in our medium-term management plan. This fiscal year, we will push forward with our targets of 28,000 million yen in net sales, 4,800 million yen in operating income, and 15% for ROE and ROIC. As shown in the graph on the right, customers often secure annual budgets for system implementations, which creates a tendency for our net sales to be heavily Q4 weighted. We expect this trend to continue in FY2026 and FY2027. Therefore, although the 1H figures may appear modest, we would like you to understand that over the course of the full year, our tendency is to recover in Q4. Our targets are broken down into system development and sales and recurring. Looking at the financial sector, we are seeing favorable progress in packaged system renewal projects, with an increasing number of orders. As for the public sector, the implementation of government standardization projects is moving forward as I mentioned earlier, so we expect to achieve solid growth there. As I mentioned earlier, we made the decision to forego certain BPO orders. However, as we have established a solid foundation here as well, we expect growth in both orders and sales. And with this breakdown, 15.9 billion yen in new orders and 17.2 billion yen in net sales for system development and sales, and 13.5 billion yen in new orders, 10.7 billion yen in net sales, and 2.3 billion yen in segment income for recurring. We intend to achieve our overall outline of 28 billion yen. Regarding shareholder returns, we commit to these three: a target dividend payout ratio of 50%, a total return ratio of 70% or more, and progressive dividends. Under our current plan, we can certainly achieve the 50% dividend payout ratio. As for the total return ratio, we will promptly consider whether to address the shortfall to the 70% target through dividends or other means, and announce our decision. This concludes my presentation. Thank you very much for your time and attention today.
Thank you very much. With that, this concludes today's briefing.